Okay, part two, real quick. So, of course, we last time we talked about doing the last video right before this. I talked about how with you only collecting 43%. So again, what you want to do is, and these are because the strikes are 5 wide. See, 5 wide. So what you could do is you could move the strikes out. And the reason why I like do it, you notice I'm not using any dollar amounts. That's because we're just going by the probabilities, the statistics here, right? You can just, and it's very visual. You can move these out to the 2 standard deviation like a true golden gecko. And now look, at least you can collect more. Okay, 68 cents. See that here on the SPY? These are still 1.5 standard deviations out of the money, roughly around 91%. Okay, and you're just buying the wings. You have a probability of profit of 84%. Click on this leg and you can see what this is on Thinkorswim. So you're gonna sell a iron. This is basically a golden gecko, which is an iron condor, and these are the strikes: the 178 put and the 216 call. When you go to Thinkorswim and you type in SPY here, you go to your trade page. Hold on, it's taking time to load. 1 second. Go to your trade page here, and we're gonna go to the same strike, which is right here. To do that in Thinkorswim, well, there's a bunch of ways to do it, but you need to just kind of remember the strike prices, right? So as you remember, 178 and 116 and the 168 and 225. So I just remember the one. Let's just I'll just go back and forth. So we're gonna do the 178 put and the 216 call. So you go over here. Here's your put. You find the 178. You go to your bids, the bid column, because whenever you sell something, you're always selling the bid. So you're gonna right click, right? And here's what you do: you go to sell, and then you go to Iron Condor down here, and then from here you can adjust the strikes. Okay, so watch. I'm gonna click Iron Condor. See down here, look what it shows you. So we already know we're selling. The minus side's meaning you're selling. We're selling the 178 put, and then let's adjust the call side. We're also gonna sell the 216 call. So you go to the call page and look for the minus sign where it says call, right there, right? And then you just click on this, and you can type it in, right, or just manually scroll up and down to do it. We're doing that with 216 call, so let's adjust this to 216. I think I can type it in. Oh, whoops, whoa. What did I do here? Okay, anyway, let's go sell the 216 call. Here we go. So we're gonna sell the 216 call. We bought, oh, what did I do in the put? The put was 178. We're gonna sell the 178. We're gonna buy the 168 put. So find the put with the plus sign. Move this to 168. Okay, like this. Boom. And then the call side, we're going to buy the 225 call. So find the plus and move this to the 225. And where is it? There it is. Okay. And then you will see credit for 68 cents credit. And the mid price is 68 cents. And from there, you just hit confirm and send, and you can send your order in. Okay, it's a limit order. It's good to, to the day, and that's pretty much how you do it. So as you can see, that's why I love Do. It's so much faster because this will memorize your trade. Next time you go to Iron Condor, all this is preset and it's really easy to adjust. Can't do that in Thinkorswim. At least maybe well, they just added a filter area actually, which is brand new. See this? You can turn on your filter right here, and you can filter for different strikes. But the other thing you can do in Thinkorswim is you can go down here. Wait, let me just cancel this. I'll delete this. Okay, now in Thinkorswim, what you can do is see where it says strikes. You can select different amount of strikes. You can see where it says spreads. It's singles. You can change this, and you can put Iron Condor. It'll show you all. It'll pair up all the different Iron Condors, but not by. You can't do it by probabilities. You see what I mean? So these are all right across the board: 194, 195, 193, 192. Call and put iron condors. Um, and this is just a layout for up here. I have mine as probably out of money, probably in the money return on capital. So that's why I love using Doe as far as well, you can go to deep and wide here. Let's try it. You can go 1 month, one strike, so you can make them 5 strikes apart. Let's go. Well, I guess you can't go to 5. I don't know if we can. Iron Condor, 4 strikes wide. Yeah, see, it's the max you can go is 4 strikes. So maybe this is what you could do. You could do it something like this. Okay, and then adjust it from there when you click on one. Watch. Hold on 1 second. Come on, guys. Jeez Louise. My computer. Oh, what's going on here? It's super slow. Anyway, there. See, now your strikes. Whoops. Yeah, okay. So now you can see your strikes are much wider apart. Okay. But now we're gonna want to adjust this. So let's say, yeah, then you gotta find the right expiration, and then you can kind of try and pick, and then your probabilities don't show up over here. So I usually just keep this to single because it's a lot easier to do it that way. And then that's the great thing about Doe. You can just do it right from here. Okay, and it'll tell you what it is. So you could just write, if you're on a different platform or you're on Tosh, you can just go back and forth by clicking Alt Tab and just going back and forth and doing it. Okay, so I did want to cover that. I didn't want to just, I know I reached the end of the video the last time. And as far as how much to put in, because IV rank is at 41%, today's market measure showed you that based on the size of your account, risk capital allocation, okay, and it'll show you what they did. One standing percent from 2005 to 2000 to now, and I'll show you right here. Based on your account size, if you have a $20,000 account, because IV rank is right here, you know you don't want to allocate more than 35% at the current time. Because if, let's say, IV rank climbs, then you want to allocate more of your account to that. So just give you a heads up. So that's why this is my favorite slides thread. So if you go under Golden Gecko and you look for my favorite slides, you'll see all the slides and what I use to monitor and manage your positions. Let's see, I've got a few minutes left. Let's see what else is going on in the market here. So here is the SPY. We're up, it's about the same pretty much. I'll zoom in a little bit. All right, I changed the background to hopefully see the blue a little bit. I don't know if I like this. I might go back to the black. But anyway, as you can see here, IV rank is 41.1%. Okay, it's acting kind of funky over here. See that? OBV cross, I just covered in the last video. Look for this to get down to about around here before the market starts to possibly turn over and go back down. And if you want to increase your probability of success, and you're saying, Mark, IV rank on SPY is only 41.1%. What else can I trade that's higher? Well, I closed my watch list bar, but see this little tab down there? If you click it, here's my watch list. Okay, so here's I have a scan always going of high IV rank ETFs. So I've shared that scan a bunch of times, but if you need it, email me and I can share the scan with you. So yeah, I can always easily send it to you via email or whatever it is. So anyway, I have this sorted by high IV rank. Here, FXE is a high IV rank. These are all sorted by descending order. You can go ahead and look at those if you want. Here are just IV rank, everything, stocks or whatever. Okay, the highest one I have here is BBD, which is, I don't know what that is, but it has earnings. See this light bulb and phone? That means it has earnings. So the ones I'm looking for ones without it, but we're in earnings season, so it's hard to find. Okay, so that's why I like to use Dole as well. If I go to Dole right here and go to the grids page, okay, here, all the stuff without any earnings. Click on your filter, hide them all, and there you go. PBR and EWZ, you might, like I said, you might want to scale bullish for this weekend because they have election this weekend. So look for it to climb. Watch, look at here's EWZ. Here's a binary event. See, it's 72% IB rank. Here's the chart. I think earlier when election was, it spiked. So you want to, this can really move. All right, look how wide the 2 standard deviation move is on this. All right, so let's see how much we can collect on this real quick. If we do EWZ, I got a few minutes. And now because it's a binding event, you might want to give yourself time, but you might want to go to a shorter period. Okay, so what do I mean by a shorter expiration? Well, this is expiring, excuse me, December here. Wait a minute, I don't have a position there. Why is it showing me that? Anyway, so this, but what you want to do is, here we go. So what you want to do is you might want to shorten your time to expiration by going to time here and moving this slower. You don't want a weekly, so you keep on going. Okay, here, 28 days. This might be better, so just in case it moves, you have time to make it up. All right, so what you want to do here is, let's see if we can collect enough. So let's go to strategies, go to strangle, I'm sorry, and let's just go here, and let's reduce expiration time down back to November right here. Okay, 28 days. Let's adjust these strikes so they're right around that line, as close to the line as we can get. Here we go. The reason why the markets are so wide is because, see these teardrops? 11 cents wide on the put side, 21 cents wide on the call side, because I think it's just because it's a binary event. Anyway, we can collect $1.07. Let's go to Thinkorswim and see what our expected move with 28 days to go is. Go to Thinkorswim, type in EWZ, which is already here. Click on your trade page, which is right up here. Okay, hold on. Click on that trade tab. Look for that one, which is right here. Expected move is $5.71 roughly. Open up your calendar here. $5.71. You want to multiply that by 0.198. Okay, you want to collect at least $1.13. Not quite there yet, as you can see, but you can still do it. So what you want to do then maybe, and the expected move is, what do we say? It's $5.71. Okay, so what you want to see is you want to see where it's trading right now. $5 plus this is what, 46.72. Okay, so good, but we're outside that. And $5.71 below this is, and we're also way below that down here. $5.71 below 41. Okay, and you want to make sure your strikes are on the outside of that because that's the expected move. Now, because this thing is skewed because we feel like once the election over, it'll be skewed upwards. What you want to do is, now that you can play this trade, go to strategies, go to Iron Condor, same settings, and you're just going to skew it. Okay. So what you want to do from here is see where it says strikes. Skewing means you want to be biased more to the upside. You could just click it like 1 or 2 times, because if you think, or 3 times maybe, because you're thinking it'll be skewed to the upside, meaning you think once volatility collapses and the election over, the stock will rise. And this buys you more, as you can see, this buys you more space on the high side. So if it shoots up higher than 1 standard deviation, you should be okay. And it shows you your probabilities right here, and your strikes are right, the width of your strikes right here. Click off the leg, and here's your put and call, the dollar amounts. But with Dole, you don't have to worry because it's tied to Thinkorswim. Just hit review and send. It'll show you. Okay, 10% on 4. Wait, let me just go back, and I'll click on this. It's easier. Here we go. Your max loss is 402. In this case, in a mini golden gecko, 10% of that is $40. You're gonna, if this thing goes right, you can make 20% on your money. So this is one trade you can do. Okay, so I hope that helps. Pretty much it for the weekend. You guys have a good weekend, and we'll talk later. All right, have a great weekend.